Let's talk about, first of all, on a serious topic, the Ukraine fallout.
Yeah.
I know that you're more geared towards a soft commodity space, but what should investors be doing right now, Greg?
Well, I think
it's obviously very intense.
Yes, it is, and there's three issues they need to think about. It's gold because of global concern about what's evolving, so that should be bullish for gold. Also for the grains, I think that if they start to reduce exports due to bans, grain prices will go up, and also gas prices will start to go up. It's one of the weapons that the Russians have used in the past, and I think that that will have that flow-on effect into the US markets as well. So the three to look at are the grains, your precious metals, and maybe gas, lesser extent, Brent crude oil.
When you read the first headlines from the Ukraine, what did you start trading?
I started buying more gold. I think that gold is an insurance policy.
Risk-averse, safe haven.
Exactly, the safe haven. You sort of follow the herd. The other thing is I think the Chinese will be buying that as well. There's enough issues in China to support that. So gold's the first and foremost whenever you have a problem like this, John.
Now, looking at wheat, drought, the very cold US snap and the weather-wise again, clearly the prices there have been going up as well.
Yeah.
Coffee, the price is up 62% this year.
Yeah.
Which is extraordinary when you think about it.
It is.
But also the drought in Brazil, Australia,
yeah,
where you come from, of course, the US, and again across Asia, parts of Asia.
Yeah. So
it's pretty intense. You've got the drought, you've got political uncertainty, you've got the cold snap. I mean, how do you again play this when you're advising your clients?
Well, we propose that they should remain long, all those commodities, until the middle of summer, because what they're doing now is pricing in the concern with the current weather. And so they could be underestimating or they could be overestimating at this stage. Coffee is interesting because that is really quite severe and up 44% last month, John. So the market's pricing in probably worse.
44% in a month?
In a month. And that's pricing in worst case scenario because you could lose a large chunk of the Brazilian crop due to weather. Soybeans is another one, wheat. Just about all the commodities across these complexes are starting to move, either weather-related or political tension. And every year when I start, and as you point out, I've been doing it for a while, I'm actually bullish the scenarios evolving and then the follow-on impact of commodities. So I started the year bullish, political tension and adverse weather patterns. And so I built my portfolio accordingly. Last couple of years we haven't seen that, but this year could be very similar in the ags to 2010, where you saw them up 30–40% due to bad weather. Last time we saw coffee moving like this was in the 90s and then in the 80s. It's happened before and it can happen again, and indeed it's already evolving. So I would suggest net long across the complex with relatively wide stops because of the volatility as well.
You mentioned your portfolio again. What's your largest weighting? Is it gold now?
No, my largest weighting still is in the energy sector, then followed by gold. So it sits around about third or fourth in the weightings.
So energy, what, oil, gas? I've just had a guess,
just a
Alex,
blend.
about uranium potential.
Yeah, well, uranium is the fuel of the future, but it's just the politics around that. They need to go to uranium because we can't sustain, peak cars, 100 million cars in the previous article that you were running. That's not counting the cars that are already on the road. So demand for electrical cars, more fuel efficient, is coming, but heavy industry is still a big user. So really, uranium is just offsetting electricity, but actual transportation logistics still requiring crude oil and hydrocarbons.
You mentioned before gas, of course, the Ukraine, Russia, the huge currency of choice of trading is the gas. And the Russians say, if you don't do this, we're going to cut off your gas, etc.
Yeah.
Is that the hardest trade to figure out right now, the gasoline?
I don't think it's that hard to figure out because Putin's made the first move, the rest of the world's reacted. His next move will be start cutting back gas. So I think basically buying that on the back of not enough coming through Europe is worth doing. They'll start to try to import it from the Mideast. But it's not good, and the tension's not going away, John, and that'll be reflected in some of the commodities we've been talking about.